If you're talking about the equity markets in particular, they are very connected to the rest of the world in the sense that it's, I think, among the emerging markets, it's one of the most liquid. So in that sense, investors that are looking for Brazil exposure obviously are looking at the Brazilian market, but also investors that are looking for just emerging market exposure as a whole will have to look at Brazil, which is quite different than maybe 15, 20 years ago when the liquidity or the number of listed companies was much, much smaller than today. So I'd say the prices are fairly connected, or the volatility is fairly connected to what's going on in the world. Obviously, the fundamentals of the companies listed in the market in Brazil, they diverge. We have a very big number of companies that are focused on the domestic economy, and those are typically very insulated because Brazil is not a very open country in terms of there are very high tariffs to import most things. So Brazil is a fairly insulated economy in that sense. But there are obviously a number of very large commodity producers and exporters, which then will be much more affected by what's going on in the world and much more connected to both the commodity prices as well as the dollar-real exchange rate. I think there's one big change in terms of the kind of foreign money that's been invested in Brazil. If you compare from, let's say, in 2004, 5, 6, 7, when there was a huge emerging markets commodity-led boom, including Brazil, we found a lot of very short-term capital looking for opportunities in Brazil. Things would go well, the equity would go up, the currency would go up, and investors would just put more money in, etc. Then 2008 came, and obviously that was a tremendous loss. I guess in US dollars, a dollar-denominated investor probably lost around 70 or 75% of their investment vis-a-vis 1 year before, given what happened to the currency and the stock market. But then since 2009 and 10, when the money started coming in again, we've been seeing a lot of longer-term capital coming in, especially to equities. To fixed income, I think there's a combination, but especially to equities. These are investors that have spent a long time looking at Brazil. They realize they must have, or they want to have, some exposure to Brazil. They know it's volatile. They've seen what happened in 2008. They have that information. So maybe they will take longer to invest, or maybe they will invest less than they would otherwise. But in any event, I think it's longer-term money. I think it functions in a very transparent way in many ways, especially if you compare to developed markets. It's very transparent. If you compare to other emerging markets, it's even more transparent than you would expect. That's because I think Brazil has a very, very developed regulatory body to regulate what's going on. The local version of the SEC is fairly advanced in Brazil. The kinds of disclosures that both companies, but also investment funds, mutual funds primarily, have to disclose are enormous, and they are compulsory. And hedge funds, for example, in Brazil, they have the same disclosure rules as mutual funds or as individuals investing. So I would say it functions in a very similar way than other parts of the world. What's different, obviously, is how each business functions and how the fundamentals of the companies are. And you still have several businesses that either are family controlled, or if they're not family controlled, the family or the founding family or the original owners they may be a minority investor, but they'll have a lot of influence on what goes on in the business, even though they may not control it with 51%. You still have companies that have an older shareholding structure where one share does not have one vote always. So most companies that IPO'd in the last 15 years or 12 years, they have one share, one vote, and many of the older companies converted to this model. But you still have a fair number of older companies that have ordinary shares and preferred shares. So you may be able to buy only preferred shares in the market, which are usually liquid, but they don't have any voting rights, sometimes with as little as 17 or 18% of the total shares of the company. If they are all ordinary shares, you can basically control the company. So there are some nuances, but it's much less apparent than it was, let's say, prior to 2004, which is when the Brazilian equity markets really sort of modernized. In many countries, the biggest investors are the pension fund system or the institutional investors. And in Brazil also, I believe the pension funds are amongst the largest group of investors. However, because our interest rates are so high and historically have been so high, right now, for example, the inflation rate in the last 12 months in Brazil has been around 9 to 10%. But the government is paying sort of the local money market funds, they're yielding about 15%. So you have 5 to 6% real interest rates, and that's huge. So the pension fund, and that's been going on for decades in different magnitudes, but always high. So pension funds, they don't really need to invest in equities to get to their actuarial goals. So they all invest in equities, but very little. And they have 80, 85, 90%, sometimes 100% of their portfolios invested in government bonds or in fixed income. So equities in Brazil are held by either individuals or by foreigners for the most part. So I'd say foreigners are relevant in Brazil. And so are Brazilian families or Brazilian individuals or some insurance companies and some pension funds or most pension funds, but with a smaller percentage of their portfolio than you would imagine. The financial institutions in Brazil, they're very, very solid. And the main reasons for that goes back to the regulatory system that we have that's been put in place years and years ago when we have a tremendous amount of inflation. So we had inflation that averaged 70 or 80% a month 20 years ago. And when that happens, the government needs to be really, or the central bank really needs to be on top of everything in the banks, everything that they can, as close as possible, because things change very, very quickly. So we got rid of this very high inflation in 1994, but we still have the regulatory system in place. Also, because banks make so much money just by lending money to the government. As I mentioned, we have very high real interest rates. So a lot of the balance sheets of banks is actually just lending money to the government. And only about 10 years ago, we started having real credit being issued by banks. And that's still not a lot compared by any global standard. So yeah, I think the system is quite solid. For a long period of time, it would react more, but in the same direction, just a higher beta. So if things were, if you got a week in shorter periods of time, obviously in long periods of time, it's very different. But in shorter periods of time, you would find a week where the S&P would be up 3%, Brazil would be up 5%. And if the S&P would be down 3%, Brazil would be down 5%. Now, in the last 2-3 years, Brazil is very separated from the rest of the world in the sense that we have this political crisis going on. So the big moves up and down, they are much more related to what's going on politically. Interestingly enough, every time that it seems that the impeachment will go ahead, the market really has been going up. And whenever it seems that the president is going to stay in power, then the market goes back down, which doesn't give you a lot of credit, doesn't show a lot of credibility to the president, obviously. Brazil has now a very difficult economic situation for many reasons, primarily because many of the measures that the government took during the boom times of the commodity prices and the strong currency and an export-led cycle of growth, the government didn't take a lot of difficult measures in terms of restructuring, whether it was the tax system or whether it was the labor laws and so forth. Nothing changed, and those were very ancient and very problematic mechanics that we have in Brazil. And now we're seeing the other side of that. Most of the money that Brazilians made was actually spent, was not invested. A lot of it was, we started having credit available about 10 years ago, which before we didn't have in Brazil. So lots of people are overextended in credit, and 10 years ago didn't have any. So we had the benefit of being able to borrow and then spend the money, but the GDP didn't grow proportionally, or people's incomes didn't grow proportionally. So that problem we've had, and we'll have to deal with it. And it's not an easy problem to be dealt with, or it requires a lot of belt tightening, a lot of changes that are recessionary in nature. But they haven't yet been put into place. So we know that at some point, people will have to fix the economy, or the government will have to take measures to fix the economy, and that will be probably recessionary, at least initially, although I'm sure it will come with a very big relief that the right things are being made or being done, or the difficult decisions are being taken. So basically, maybe the market anticipates that and actually goes up. I don't know, but there will be a difficult economic period in the future. The problem is we're far from this point because we still have the government in place, which has created all these problems and which seems to be much more interested in remaining in power than in doing anything better for the economy.